Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of June 24th through June 28th, where we'll try to help you make money trading while the Magnificent Seven momentum continues. So again, thank you for joining us for part one of our weekly trading game plan for June 24th through June 28th, and let's get started. Good morning, The Crow. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. So here's our Google document for part one of our weekly trading game plan for June 24th through June 28th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas, etc. We keep all of our notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as our weekly trading game plan notes from previous weeks. And you can find direct links both to this Google Drive folder and to the individual notes documents in the description box below. So firstly, we'll take a look at how the markets ended up on Friday in the main page on FinViz. So we can see all the indices were pretty flat. Just a reminder, Friday was options expiration for June, and it was a quad witching day. So we'll see kind of a tug of war with the options, trying to keep them from getting in the money. So it's I see that kind of tug of war going on due to the quad witching day. And so all the indices were pretty flat. Dow up 0.04, NASDAQ down 0.18, S&P down 0.16, but again, just kind of a tug of war and pretty flat. We had only 45% advancers, 50% decliners, again, pretty balanced. Got 36% new highs, 63% new lows. We've now got about a 50-50 split around the 50-day moving average, so 50% above, 50% below. And we've got 62% above the 200-day, 37% below. And again, our theme for this week is the Magnificent Seven momentum continues. And again, we see, although there was a slight correction in NVIDIA and somewhat in Apple on Friday, NVIDIA on Thursday, Friday, NVIDIA on Friday, several of the other Mag 7s stepped up and held the indices pretty much flat. So again, we'll see that in a number of areas. Otherwise, weak sectors, industrials and financials somewhat weak, energy weak on Friday, utility somewhat weak. Look at the news. Yep, Netflix investors share add momentum. Credit spreads widen on political jitters. Bullish bets on top stock like NVIDIA surge to a record high. So again, the Magnificent Seven momentum. Thrashed again on stock boom. S&P books third straight weekly gain. So again, momentum in the S&P. So oil had broken above 80. It's now down just above 80. Looks like it's got support now at 80. Natural gas had broken up above 3. It's broken back down. We'll see if it's going to head lower or make a new higher low. Gold retreated significantly. There was a big pop on Thursday, big correction on Friday, so some significant volatility in gold and silver we'll see. Now it's back below 2350, so may get a retest of that 2350, and then we'll see if it tries to break back above 24 or trail back down. Dow futures showing slightly positive, S&P and NASDAQ slightly negative. Small rebound in the Russell futures. Bitcoin down to 64K. Japanese yen has been pretty weak. I think DXY is sitting above 105 now. We did have a significant retreat in bond yields, but they did bounce back on Friday, but still below 4.5%. Still got that inversion between 5 and 10s. So again, we'll see some kind of barcoding in the U.S. Treasury futures prices. Welcome to Ricky Khan, LinkedIn. Danelle. Thank you all for joining us today. Hope you're doing well. So look at a breakdown of the major indices and then the technology components. Just a quick reminder, you can access these screeners in our notes documents and also in the screeners tab of our ETFs and Watchlist Google Sheets. So if we look at a breakdown of the major indices, see the Dow has actually been pretty flat, just kind of oscillating. It's got a double top, tested that, bounced back down to the support, bounced up. It's got a, slightly sloping up trend line, but again, just kind of a flat, oscillating back and forth, tightening wedge at this point. So I'd expect that similar lateral oscillation. IWM's been weak, again, higher for longer with rates, etc. So again, it's kind of broken down below that lower trend line. It's got a lower support trend line that possibly retest. Now this trend line's providing resistance. So again, more potential downside in the Russell and the IWM. And then we can see the strong Magnificent 7 momentum in the Qs and in the SPYs. So Qs ran up, made a new high, rolled over slightly the past couple days. And then again, strong uptrend, upturning moving averages, etc. Similarly, but not quite as strong in the SPY. But again, strong upward momentum, slight correction on Thursday, Friday. So let's look at a breakdown of the technology components. See again, ARK-K not really participating in this Magnificent 7 momentum. Again, they're not heavily. They're in Tesla, I believe. I think Kathy Wood sold out of a lot of her NVIDIA. So again, ARK-K not really participating, just oscillating laterally. Again, we see that strong Magnificent 7 momentum in FANG-U. So FANG-U contains a lot of the Magnificent 7. So we see that strong momentum, made a new all-time high, and then slightly corrected on Thursday, Friday, primarily due to the dip in NVIDIA, somewhat in Apple. Semiconductors, again, in NVIDIA, AI FOMO, Magnificent 7 driven, and again, AI momentum driven. And then we got that correction in NVIDIA on Thursday, Friday. So we got a new all-time high, slight correction. Looks like it might gap fill. So we might get some further downside in SOXL to fill that gap. And then we'll see if we get a new upsurgence. So again, steady upward trend. Again, biotech's not participating as much, not, really the Mag 7 oscillating within this narrowing wedge, right around this longer term moving average, just some volatility, oscillation around that moving average. TQQQ, just like the Qs, so leveraged on the Qs, so similar behavior, strong momentum, new all-time high, slight correction back below that trend line. So we'll see again if we get some more correction or if it just trends back up. And the broader technology, not as driven by the Magnificent 7, but definitely influenced, heavy in Microsoft and Apple, not so much in NVIDIA. So we got a strong momentum up, new all-time high, slight correction. So again, we'll see if we get downward trend to fill that gap or if it just trends back up again. So again, strong in the Magnificent 7 momentum sectors, weaker in those not participating in the Magnificent 7. So I hope that all helps. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. Look at a quick breakdown of the groups and the sectors and the industries in FinBiz. So if we go to the Groups tab in FinBiz, we can see how the groups and sectors performed. So it's somewhat interesting between Thursday and Friday. So Friday, communication services, cyclical, healthcare positive, real estate slightly positive. And we got that retreat in energy and technology. It was kind of interesting. On Thursday, we had a strong sector rotation. I think it was into energy, into basic materials. And then on Friday, we got that rotation back out. So for the week, communication services, Financials, some defensive and cyclical, so consumer picked up a little bit, energy positive, utilities, real estate negative, so again, sensitive to interest rates. Technology just slightly negative. For the month, though, technology's been the clear winner. Weakest have been basic materials, energy, and utilities. And for the quarter, and we'll talk about that this week, is also end of quarter, end of the first half of 24. So again, we'll see some rebalancing. So it's useful to see the quarter strength was technology, utilities, communication services, weakest energy, basic materials, real estate. So again, we may see some sector rotation at the end of this week due to those quarter and half year rebalancing. Similarly, technology, communication services for the first half, the weakest, energy, basic materials, real estate. So again, watch for at the end of the week, early next week, rebalance due to end of quarter, end of first half, from the laggards or from the leaders into the laggards. So very quickly, if we look at the industries, again, we saw a rebound in some basic materials, rebound in real estate a little bit on Friday, some of the REITs. Weakest, again, we got a retreat, gold and silver, again, significant volatility on Thursday and Friday, retreat in solar, oil, so correction back in oil again. Coal, coking coal, this was interesting. That's been significantly negative, so I was looking to see maybe some further downside there. Might give us some trading opportunities. For the week, gold was strong, silver generally strong. So basic materials recovered some for the week, some financials, some retail, steel. Silver slightly positive for the week. REITs generally negative. Uranium negative. Again, another sector I've been looking at the individual stocks for potential opportunity. We've seen some correction in uranium, so it seems to be coming back down. So again, looking at some of the individual stocks there for some potential opportunities. Again, major correction in solar. For the month, semiconductors very positive. Solar was positive for the month. Oil, gold negative, steel negative, silver very negative. So again, a significant correction during this month for gold and silver. So semiconductors, again, NVIDIA, gold and silver strong for the quarter. Steel, very negative. So again, we're seeing some slight correction in steel. And then for the year, semiconductors, again, the Mag 7, NVIDIA, copper, aluminum positive, uranium positive for the half year. Pharmaceutical, steel for coking coal, REITs for the quarter. So again, we'll look for some rotation, leaders to laggards, laggards to leaders, again, at the end of this week, going into next week. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So I hope that all helps. Okay, let me grab a drink and we'll go through the economic data from last week, look at the economic calendar for the upcoming week. I'll go through my notes of some of the highlights, and then again, we'll look at the whole calendar in investing.com. Okay, just a quick reminder, as important economic data comes out, news, etc., I try to capture that and post it in the Surf the Markets reports channel in our Discord. Our Discord is free to join. You can find a free invite to our Discord here in the notes, also in the description box below. Again, as soon as this important economic data comes out, I'll try to capture it with a screenshot. Also, the raw data, post that in the Surf the Markets channel in our Discord. Also, any notable news. I get inventories now, typically from FinBiz. So post those from the economic calendar in FinBiz. And also, again, any important news I'll post in the Surf the Markets channel in our Discord. So I'd encourage you to join our Discord. Again, free to join. Encourage you to participate actively, help your fellow traders, and for everyone's mutual benefit. So last week, not a whole lot of data on Monday. Tuesday, we got retail sales. This was somewhat weak, so I thought this was interesting. Again, core was actually negative, expected to be positive 0.2. Retail sales month on month, positive 0.1, expected 0.3. So for the year on year, only 2.3%, so down from previous. And X gas and autos only up 0.1. It was down negative 0.3. So somewhat weak retail sales. So in my humble opinion, showing a very slow deterioration of discretionary spending, possibly rotation, the consumer focusing more on needs, necessities than discretionary spending, and so some slowing in retail. So that might be a slow trend that we might be able to make money trading. So again, we'll talk about some ETFs I've identified to possibly trade that deterioration in discretionary spending, possible rotation into non-discretionary or staples. Again, Wednesday, markets were closed for Juneteenth, so we hope you all enjoyed your day off and your Juneteenth holiday. Thursday was first day of summer. And we got building permits and jobless claims data. So first jobless claims data, slightly initial claims, slightly higher than expectation. Continuing claims, again, slightly higher than expectation. So just a few more people looking for jobs, a few more people still looking for jobs. 4-week average is going up slightly, but again, not a major deterioration in the job market. So again, not something that would, shock the Fed into taking action imminently. Building permits were slightly weak. So negative 3.8, expected to be positive, less than expected. Housing starts weaker than expected. So again, the housing market, suffering from the higher for longer mortgage rates, higher 10-year yield, etc. Manufacturing index was weak, so again, slowdown in manufacturing as well. Then again, Friday was June options expiration and a quad witching day, so all the options and futures all expired at the same time. So again, in my humble opinion, that's why we will see quite a tug of war, holding the markets pretty steady to keep most of the options out of the money. So let's jump over to the calendar and look at any other economic data from last week, economic data for next week. Got some bond auctions on Monday. Looked like they went okay. Talked about retail sales. Capacity utilization pretty much in line. Industrial production pretty flat. Month on month, a little better than expected. Again, we've got Fed officials talking, so some volatility due to that. Crude oil stocks up slightly. We saw some retreat in oil back up over 80, but some retreat back towards that 80 area. Mortgage rates are down now below 7%. Talked about building permits and jobless claims. Again, oil inventories down, but less than expected. Manufacturing, a little better. Existing home sales down. Natural gas storage up, so that might attribute somewhat to the slight retreat we saw in natural gas prices. Baker Hughes rig count, total rig count, both down slightly. So again, holding the oil prices up. Look at the calendar for next week. More Fed officials. Again, we'll hear, when are they going to cut? How soon? How often are they going to cut? What was their dot, etc. Housing prices on Tuesday. Some consumer confidence. Some manufacturing. Not a whole lot. Mortgage prices, building permits. So it looks pretty typical. Typical economic data. Thursday jobless claim data. GDP data, so that'll be somewhat interesting on Thursday, although expected to still be positive, just down. So again, no fear of recession, just slightly slowing economy, slowing GDP growth, but again, not a risk of recession anytime soon. Home sales. Friday, more Fed officials, and we get core PCE, so that's important. That's one of the primary measures the Fed uses is PCE, particularly core PCE. So if that comes in higher than expected, again, that would delay any Fed interest rate cuts. If it comes in better, the market will assume sooner cuts, more cuts, and will probably rally accordingly. Also get Michigan consumer sentiment data. So again, that was a little worse last time. We'll see if it improves any and what their expectations for inflation are. If it continues to be high, that would be a reason, again, for the Fed to hold off cutting further. Should be pretty much done with earnings, but you can, again, see the whole earnings calendar here in investing.com as well. See if there's anyone that might impact your trading decisions. There's MSB, a steel company, steel trust, that we like to watch. It should be winding down mostly. FedEx, so transports, Carnival Cruise, so again, travel, cruise lines. So again, a few important ones to keep an eye on, see how that'll impact other companies in that segment as well. Nike, so retail, McCormick, etc. So again, you can see the full list here at investing.com and an abbreviated list in a minute, and Webull that we'll take a look at. So I hope that helps. Quick reminder, the next FOMC meeting is until the end of July 30 and 31. We don't get a dot plot until September after their Jackson Hole meeting. So again, don't expect any changes at that meeting unless something significantly changes soon. Quick reminder, you can hear how we trade around earnings via the link to that video in the notes. So I'm going to grab a drink and we'll go through the market screen, the Webull. Just a quick reminder, if you're not already using Webull, you can get a number of bonuses by opening and funding your account now in Webull. Get up to 75 free fractional shares of stock by opening your account, depositing 25K. Get 20 free for depositing less than 25K. They are also offering a 1.25 cash bonus for transfers of your investments into Webull and a 3.5% match for transfers and new contributions to your IRA. So again, if you're not already using Webull, if you join with our affiliate link in the description box below, you can get all of these bonuses and also help support our BeachBum trading community, which we greatly appreciate. Again, we use Webull for our market analysis, our trading strategies, trade ideas, the majority of our trading, our due diligence, etc. I'm using the market screen on the online browser version of Webull. We like to look at the histogram of decliners and advancers. Here's a good example of where we can see the tug of war on quad witching day. So the number of advancers and decliners was almost the same, and the percentages on both sides very much the same. So again, my humble opinion, Friday was mostly just a tug of war on the huge quad witching day for options expiration, kind of hold things, out of the money. So again, we just see that tug of war. Things didn't really move a whole lot. The net inflow was quite interesting though. Is we see a very low positive inflow in the NYSE, very steady, but we see this huge steady inflow into the NASDAQ. So again, my humble opinion, it's probably, money flowing into the Magnificent Seven, some rotations and profit taking, but net inflow into the NASDAQ, very steady and very high on Friday, uncharacteristically high. So you can also see the earnings calendar here in the calendar widget in the market screen on Webull, so you can see who's got earnings coming up in the near term. Keep an eye on that, see estimates, etc. Let's look at the best performing industries for the week. Got a government company was the leader. Some networking, software, retail, somewhat positive, Ollie's. Media and publishing, unusual, insurance, retailing. So several categories of retailers did pretty well, even though we kind of saw that somewhat weak retail sales data. Consumer goods, so similarly. Metals and mining, somewhat positive. Aluminum. Oil and gas, somewhat positive. Logistics. Pharmaceuticals, mostly negative. Financials, split. Oil and gas, somewhat split. Look at the ETFs real quickly. Local Malter Lions, thank you for joining us. Hope you're doing well. Sydney Osborne, good to see you here. Hope you had a good trading week. It looks like some foreign currencies, some of the top performers. Dow showing up slightly. S&P mid caps. Then short S&P, short the NASDAQ. Short Bitcoin, BITI is the short on Bitcoin. I think Crow also mentioned another ETF we've looked at, I think is SBIT. Down on the BIX. Up on the Russell, up on small caps. EPV is down on Europe, FTSE Europe. Industries. XBI, biotechs, looks like another biotech related. Industrial somewhat negative, healthcare positive, financials negative, utilities negative. Again, this is all Friday. Energy negative, real estate positive, technology pretty split. Basic materials, there's a water, that's probably a cattle, another water, a couple water positives. Consumer defensive. Commodities, platinum, palladium. We'll see this all in the futures as well. Cane, sugar, platinum, palladium. Foreign currencies, we'll see that in the futures. The Forex, so mostly negative relative to the dollar. Again, we saw DXY strengthen some. Okay, so we'll also look at the futures in FinViz. Also, a quick reminder, you can now trade futures in Webull, and you can find a link to the details of their future trading offers, both in our Discord and also on the promotions page. So again, you can see their promotion: deposit 1,000, get a free commission, first 100 contracts, 3 months of CME level 2 data. So again, you can find that promotion and get more data also on the promotion tab on Webull as well. So again, you can also now trade futures on Webull. So if we look at the futures in FinViz, and we can see, upward trends in all the major indices. Got a little bit of a rollover. Got a new top in the S&P. Again, Mag 7 momentum. A little bit of a rollover. Again, we'll see if we gap fill. Got a longer way to go in the S&P to try a gap fill. So we'll see if we continue on that downward trend to get that gap fill, or if we just, ignore that gap for now and head back up. Again, Dow not as strong, Russell pretty flat, Nikkei pretty flat, Euro stocks did rebound but negative. Again, turmoil in the EU parliamentary elections in France, etc., caused a major dip, but it did have a bounce recovery. Same way with the DAX. Again, VIX futures up above 14. I think the actual VIX dropped back down to like 1320 or so. So again, still not a whole lot of fear, not a lot of volatility, and a quick retreat. Again, oil broke above 80. Looks like it topped out. We'll see if it comes back down, retest that 80 support level. If that holds, if it's going to go back up to 85 or above, or break back down towards 75. Again, natural gas had peaked out above 3. Broke back down below 3, retested 3, failed, broke back down. So we'll see if it comes back down to retest that previous bottom, or if it's going to make a higher low and then again retest 3 again. Again, gold consolidated for a while. We'll see this in gold and silver. We had a period of consolidation. Then on Thursday, we got this strong surge up, and then a quick retracement back down on Friday. So again, we'll talk about the ETFs. You can trade short-term gold and silver. Again, it does look like it's making lower highs, both gold and silver making lower highs. Gold's got strong support around 2,300. Silver's got strong support in the 2870s or so, not quite 2850. 2850 would also probably be a support level, but strong support there. So again, we'll see if it retests that previous low, if that holds and it bounces back up, or if that breaks down and again retests the next levels. But again, strong support in gold at 2,300, strong support in silver 2870 or so. But again, short-term trading, you can see these very volatile pops and then quick corrections back down. So again, short-term traders, scalpers, plenty of good opportunities to make some money trading that volatility when you see it occur. We see these periods of consolidation doesn't really do anything, and then suddenly a pop and then a quick correction. So I hope that helps. Copper been kind of trailing down, similar pop on Thursday, correction below the previous pop, got support 440, 440-ish. Other commodities, corn, oats, cattle, etc., pretty much trailing down. Wheat coming back down. Unfortunately, still don't have an ETF to short wheat. Cocoa rolling over, orange juice, lumber really broke down. I think that's on the weaker new home sales numbers, so significant breakdown in lumber. Again, I've looked at the cut and wood ETFs we have in our ETF Google Sheet to trade lumber. Risk reward on those ETFs really isn't all that exciting, but if you can long or short the futures, looks like that short would have been profitable, and when it does bounce, there might be some opportunities for futures trading in lumber. Again, we see the treasuries pretty much barcoding recently, just up and down, at this recent top, very near the previous top. So that does seem like a very strong resistance level, and then we just get some barcoding along that level. DXY did break up above 105, so it might, continue up 106 plus. Again, Japanese yen, very weak. Every time I think they were intervening, it doesn't hold. So we'll see if we get any more serious intervention by the Bank of Japan to strengthen the yen. But again, just been very weak, unable to hold any gains. Swiss franc had popped up, rolled over. The other foreign currencies look relatively stable. Pound rolled over. Again, I guess they're having snap elections in Britain as well, so possibly a cause for some weakness in the pound. So I hope that all helps. And Easy Mike says, yeah, fade the euro. So again, quite a bit of turmoil in the European markets. And in a second, hopefully I'll point out some ETFs that you can trade these various European markets as well. Let me grab a drink and then we'll look at our ETFs, how we can possibly trade some of these opportunities that we've identified. Just a quick reminder, once we identify a possible trade idea, a possible opportunity to make some money, given some of these market analysis, etc., then we can jump over to our ETFs Google Sheet and find an ETF with the best risk reward profile to either long or short that trade idea. So we'll take a look at our ETFs Google Sheet and some additions to our ETFs Google Sheet. Just again, a quick reminder, you can also use our ETF Google Sheet to find ETFs to trade your trade ideas by joining our Patreon at the All Access or VIP level. So again, let me grab a drink and we'll go through a number of updates to our ETFs Google Sheet that I've identified. So firstly, some updates and additions to our ETF Google Sheet that I wanted to share is, as we mentioned, when they had weaker than expected retail sales, and also I heard, travel I guess Winnebago RVs reported weaker than expected EPS earnings. Also, we're hearing some weakness in restaurants, some restaurants, etc. So I thought a trade idea that we mentioned was possibly we're seeing a decrease in spending, consumer discretionary spending, maybe more of a focus on consumer staple spending. So I wanted to find an opportunity to possibly short consumer discretionary and possibly long um, consumer staples, and possibly maybe this is an idea for a pairs trade to keep an eye on that correlation, whether we're seeing a decrease in consumer discretionary spending, more of a focus on consumer staples. So I've identified a number of ETFs to long and short consumer discretionary and consumer staples. So we'll quickly take a look at those. I've added those to the main sheet in our ETFs Google sheet. So I've got UCC, which is a leverage long on consumer discretionary. SCC is a leverage short on consumer discretionary. Similarly, UGE is a long, leverage long on consumer staples, and SCK is the leverage short on consumer staples. So now in our ETFs Google sheet, we go to the consumer section. So we've got the main sector spider for consumer discretionary is XLY. So now we can see here's the risk reward profile for the long, a leveraged long on consumer discretionary, UCC. So we can see it's relatively high, not quite at the top. It actually went up on Friday, so we could see then the short on consumer discretionary is SCC. So again, we could see the risk reward profile, see the relative movement in the long and short on consumer discretionary. Similarly, the sector spider on consumer staples is XLP. So we have the leverage long on consumer staples is UGE. So again, it's relatively high too from a 52-week standpoint. See, staples also went up on Friday, so we saw a positive movement in both the consumer sectors. So the short went down. So the short is SCK. So again, leverage short. So again, now we have these variety of leveraged ETFs to trade. If you think consumer discretionary is going down, you can trade it leverage short with that. If you think consumer staples is going to go up, trade UGE. Again, possible pairs trade with those two. So I'd love to hear your feedback. What do you think? Do you think we're going to see a continued decrease in consumer discretionary spending? More consumer staple focus, more spending there, or is that going to stay flat, or are we going to see a overall deterioration in consumer spending altogether, which maybe shorting both the consumer staples and consumer discretionary might be a trade idea. So again, now in our ETFs Google sheet, we can watch the sector spider ETFs as well as these long and shorts. Just a quick reminder as well, in the sectors tab of our ETFs Google sheet and also our Watchlist Google sheet, you can see the performance of all the various sectors for the day, so we can keep an eye and see if we're seeing some divergence in the consumer staples, consumer discretionary, as well as all the other sectors. So, and again, you can jump over to those sector spider ETF links via the profiles in the FinBiz URL column as well. So again, I hope that all helps. The other set that I identified this week and have added to the research sheet is a set of commodities, materials, ETFs that were discussed in a recent video by the ETF Guide. So again, thank you to the ETF Guide for identifying these additional commodity-related ETFs that I've now added to our research sheet. So take a quick look at each of those. So the first is SETM. This is a transition and energy related transition metal ETF. So again, you can do a find on any of these, or right now they're at the bottom. I'll sort them at some point so we can see, and then we'll go look at their profile in FinBiz. So it's Sprott Energy Transition Metals. So you can see it was way up. It's come down quite a bit. Doesn't have a huge range. Does pay a small dividend. See what it's comprised of. So we got Freeport McMoran, some gold, some rare earths. So this is all for the electrification transition is their theme. Got MP materials, some uranium, some copper. So it's the NASDAQ Sprott Energy Transition Materials Index. Mining, exploration, production, recycling, refining of energy transition materials. Energy transition materials. So again, if you are interested in that theme, the energy transition, would like an ETF that invests in the companies related to that energy transition, you might take a look at this SETM. And you can see the risk reward profile. 52-week isn't all that exciting. It's relatively new, so we don't really have a long history. So it looks like it's only been around a couple years. So it's kind of in the middle of the range right now. So again, we'll keep an eye on that in the research tab in our ETFs research tab. The next one is I've got a couple copper, some new copper ETFs that I identified from that video. COPP is a copper miners, and COPJ. And we'll take a look at those very quickly, and then we'll compare those to the one we have on our main ETFs Google Sheet right now, which is COPX. So if we look at COPP and COPJ, see here's the main copper miners. It's got a 1.4. Again, these are both relatively new, don't have a lot of history. So it's got a 52-week risk reward of 1.4. Look at the chart and composition of COPP real quickly. Again, relatively new, so we don't have a whole lot of history. Looks like it's rolled over. It's got a pivot point. Got some support. It's not optionable. Doesn't look like it pays a dividend. This one's got Freeport McMoran. That looks like a foreign. Southern Copper. Quantum Minerals. Hudson Bay Minerals. Capstone. So you can see which copper miners that one has and its composition. And we can compare that to COPJ, so a junior copper miners. So again, it's got a little bit better risk reward, 1.67. Again, made a recent high, dipped back down. Looks like it, made a bottom. Bouncing back up, although it's below its moving averages. Again, not optionable. Looks like it pays a small dividend. And look at the miners. It's got Hudson Bay, Tesco. Looks like a Brazil, Capstone, Eurocopper. So again, a different set of miners. So if you prefer, junior miners versus the majors in copper, you can take a look at COPJ. Again, it does have a very small dividend, so if that's attractive to you, you might prefer COPJ. Then again, if we compare that to COPX, which we have in our main sheet, so X copper miners, so it's got a better risk reward than the majors, 1.67. Got a lot more history, so longer term, much better risk reward in COPX. So that's why I've left COPX as our preferred play for long copper. Don't really have any way to short copper in an ETF yet. So if anyone knows of a short on copper, please let us know. But again, some alternatives, and again, these are relatively new, so we'll keep an eye on how they perform relative to COPX in the research sheet in our ETFs Google sheet. Lastly, another lithium long play. So if you're interested in lithium miners, so we've identified this LIPT, so we can take a look at it. So again, relatively new. It's got a recent, pretty decent risk-reward profile. Again, lithium's been somewhat beaten down, so it's pretty low right now. Looks like it just made a new low. So again, we'll look at the chart in FinBiz. So here's LIPT, lithium miners. So yeah, it did break down. Again, lithium's been pretty beaten down recently. So if you're interested in playing a rebound using lithium miners, looks like this has got a 4.4% dividend, not optionable. If we look at its comprised mineral resources, Pilbara, Chile, so Albemarle. So again, a number of foreign Lithium America, Lithium America's Argentina. So again, a number of lithiums, primarily mined outside the U.S. So again, you get some, foreign exposure, although it does have Albemarle, big lithium miner with mines, internationally as well. So again, if you're interested in lithium miners, maybe LITP, again, pretty decent risk reward profile, a longer term. So maybe we'll look for a bottom in LITP and see if that's a candidate for a swing trade going forward. We do have several other lithium ETFs. So we have LIT and battery. So LIT, Global Lithium and Battery, and BATT. So you can compare the risk-reward profiles of the lithium miners to these other ETFs that also cover lithium long. So we'll keep an eye and see if that LITP is one that we should move up also to our main sheet. So if anyone in the chat has other ETFs you'd like to look at, coupled with the theme of Mag 7 momentum that I want to quickly take a look at as part of our trade strategy for this week. So, but if anybody in the chat has any others you want to focus on, please throw those back up and we'll take a look at them. Let me grab a drink and we'll go over those. Okay. I'll try to keep an eye on the chat for any ETFs that y'all want to take a look at, but there's several related to our theme of Magnificent 7 momentum that I wanted to point out. We do have one specifically focused on Magnificent 7 in our research sheet titled MAGS. Again, this is a relatively new ETF, so you can see it's relatively high. We'll take a look at its chart in a second. So if you want to specifically trade long, the Magnificent Seven momentum, again, up, long. Here's an ETF that you can specifically trade that Magnificent Seven momentum, titled MAGS, and you can track it again in the research sheet in our ETFs Google sheet. So we see that momentum broke out of the recent trend, made a new all-time high, coming back, retesting that support level. So again, long-term steady momentum, upward trend, upward convexity in the moving averages, slight correction. So we'll see if that upper trend line provides support, continued momentum. Again, if you want to trade Magnificent Seven momentum, this might be one that's interest to you. Again, it's relatively new. You see that strong Magnificent Seven momentum and how that's continuing. So again, that MAGS, MAGS ETF might be one you're interested in if you want to continue trading the Magnificent Seven momentum towards the upside. Also, similarly, not quite exactly the same as Magnificent Seven, but previously that group was titled FANG, Facebook, Amazon, Netflix, Google. Now we've got NVIDIA in the MAG 7, so we can kind of compare who's in the MAG 7 versus the FANGs. So if we look at MAGs, we see heavy NVIDIA, Apple, Alphabet, Tesla. So we've also got Tesla in there, Amazon, Microsoft, Meta. So again, heavy 10%, 11% NVIDIA. So again, very strongly correlated to NVIDIA. We look at FANG-U. And we see, the relatively strong upward momentum. Do get a slightly more correction, didn't, made a new top, corrected as we saw previously. So if we look at what's in FANG-U, we can't really see it. It's the FANG stocks. It's going to be Facebook, Amazon, Netflix, Google, possibly some others. So it's an ETN. I don't know if we go to the ETF database, maybe we can get the composition. So again, you can see the composition of any ETF with the link to the ETF database in our Google sheet as well. Go to holdings. So here we see still got a heavy Twitter, Tesla, Apple, Facebook, Google. So again, it's different composition, not as heavily weighted to NVIDIA. Got some Alibaba, some Baidu, so some Chinese tech stocks in FANG-U. So again, if you prefer trading that basket long, following the momentum, you can use FANG-U. Shorting, whenever it rolls over, you can try FANG-D, shorting the FANG stocks with FANG-D. We also have another one, BERZ, to short the FANG stocks. So if you search in our Google sheet for the FANGs, we also have BERZ, another way to short the FANG stocks. So again, you can compare the risk-reward profile of FNGD to BERZ, and we did a recent video comparing those two as ways to short the FANG stock. So again, you can trade this Magnificent Seven momentum up or down using these ETFs in our ETFs Google sheet, MAGS, FANG-U, long, or FANG-D, and or BERZ short. So again, it gives you varieties to short-term or long-term trade the Magnificent Seven momentum. So I hope that all helps. Otherwise, we talked about the volatility in gold and silver. So we have a number of leveraged ETFs. You can long and short both gold and silver. So GDXU long, GDXD short. silver, AGQ long, ZSL short. So again, we saw that big pop and then that quick retracement in both gold and silver. So I think during the days, those gave several percentage gains if you were quick enough to catch when that pop and then that quick correction in gold and silver. So, okay. We have, ETFs also to trade the individual stocks. So if you'd prefer to trade the individual stocks in the Mag 7, like NVIDIA, Tesla, etc., we also have individual stock ETFs to long or short. So you can do a find a long NVIDIA NVDL, short NVDS, etc., and you can find additional single stock ETFs in our research sheet as well. So again, plenty of different ways that you can trade the Magnificent Seven momentum using a variety of ETFs in addition to the individual stocks. So we hope that all helps. So additionally, we've been talking about how to make money trading in June. So this will be the last week of June. So we'll see how June wraps up for this year. We also started talking about how to trade and make money in the summer. We talked about how to trade the summer stock market doldrums, looked at the performance for the summer. So as we transition from June to July, we'll look at how to make money trading in July. And you can see the relative performance of the summer months and best performing stocks and industries in these various months via the links to our videos. Tomorrow, we'll also talk about how we can use dividend payers and a number of option strategies to also make money in addition to our swing trading stocks. So in part 2 tomorrow, we'll be using all these trade ideas, trading strategies to select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list, and again, we'll talk about strategies using dividend payers and also option strategies to generate income while the Magnificent Seven momentum continues. So if you have any individual stocks you'd like us to take a look at, have any questions, comments, etc., please put them in the comments to this video or in our Discord. Again, we'd love to have you join our Discord. You can tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, numbers, etc. Anyone else is an imposter. And please tag us with any questions, comments, recommendations for improvement that you might have. We'd love to hear your feedback and how can we add more value for all of our fellow BeachBum traders. So we hope you like this content. Please smash the like button. Help us try to get the YouTube algorithm to eventually show us some love and share our content with other traders. Also, we'd greatly appreciate it if you would directly share our content with your fellow traders and friends. Encourage them to join our BeachBum Trading community. Join us in the chats on the weekend live streams. Join us in the discussion in the Discord, etc. Let's continue to work together to try to build our BeachBum Trading community for the mutual benefit of all of our fellow BeachBum traders. So thank you again to everyone that joined us in the chat and everyone who's watching after the fact. Thank you for your participation and support. We hope to see you back again tomorrow, 10 a.m. on Sunday for part 2 of our weekly trading game plan for June 24th through June 28th. So thank you again and have a great day.